It's about that time of day again, folks. Welcome back. Welcome back. JJ here from School of Trade. I've got my good friend, colleague, and partner in crime, Marty Errico here from Traders Audio. Don't forget to go out and see Marty and his partner Jeffrey every morning at 8:50 a.m. Eastern Time for their live broadcast on the NYMEX Exchange. And, of course, my name is Joseph James. I'm from SchoolOfTrade.com. Come out and see me every morning at 8 o'clock in our live trade room. This morning, we're going from the screen here in Los Angeles all the way to the trading floor in New York City. We're going from the screens in Los Angeles all the way to the trading floor for a very unique and very powerful morning prep. Now, the first thing I'm going to do today is I'm going to start with a technical approach. I'm a technical analyst, which means I'm using a top-down approach looking at slower time frames first, moving all the way down to faster time frames. And, of course, my job this morning is going to be quite simple. Anticipate direction at the open, because if I can do that, I can find those high percentage trading opportunities starting as early as 8 a.m. Eastern Time. So we got some exciting opportunities in front of us this morning. I'm going to take a look at the charts here first, starting with slow time frames, then I'll work all the way down to those fast time frames this morning. Then once I'm done, I'm anxious to hear what's happening on the trading floor. The trading floor is a very important part of our analysis, and that's where Marty Errico from Traders Audio comes in. Marty providing us with his pit analysis this morning, looking at market direction, intermarket divergence, crude oil, RBOB gasoline, heating oil, and Brent crude. We're watching all those multi-market divergence signals, market internals, option prices, and as always, those very important pit session trading levels. Now, without any further delay, let's kickstart this morning here. First, let's talk about some news here today. I want to first begin by putting together our plan for today. Now, as always, you head over to sidewaysmarkets.com. Did not have a chance to put up on the crude oil blog yet this morning for our charts today, but I'll have those up in just a few moments. Looking at today's news. Well, we made it to the month of August, guys and gals. We finished up the last few days of the month of July. Now here we are, the 1st of August. The first thing we always do each morning is we think, what day of the week, what week of the month, what month of the year do we have here? What day of the week do we have here? Thursday. Thursdays always mean jobless claims. What day of the week? What week of the month? Last week of the month, right? Or now it's the first week of the month, right? So fourth week of the month. It's the first day of the month, first day of August. And what month is this again? Yep, month of August. And what is August? August is a summertime month. So we break it right down. What day of the week, what week of the month, what month of the year, all right? Are we near the beginning or the end of the quarters? Do we have OPEX to worry about? And, of course, most importantly, we look at the news today. Do we have any Red Star news? Yes, we do. I've got 2 Red Star news events today. We had 2 Red Star news events yesterday. And in case you weren't paying attention, just a little bit of volatility after that news event yesterday. So this morning we come in knowing we've got 2 Red Star news events. 2 Red Star news events tell me I've got to be awake this morning. I've got to be aware. We're going to see more volume. We're going to see more volatility. We're probably going to see more high percentage trading opportunities this morning. Very important we remember that. On days without a Red Star news event, such as Monday and Tuesday this week, you'll usually see more range-bound markets. You usually see less volume and less volatility, especially with that hint of summertime trading to it. So 2 Red Star news events. I'm on red alert already this morning. We have jobless claims at 8:30. That's going to kick us off here in about an hour. PMI manufacturing at 8:58. Just before we open up on crude at 9 o'clock, we got manufacturing. More manufacturing here at 10 o'clock this morning for the ISM manufacturing index. And we've got construction spending at 10 o'clock. Guys, when you look over these news reports, these are all screaming at you, get ready to trade crude this morning. Anytime we talk about jobs, that relates to consumer confidence. Consumer confidence directly relates to consumer spending and consumption. We know that anything related to manufacturing, right? When I think manufacturing, I think big companies, big products, big warehouses, big boats, big airplanes, and they all need crude. Construction spending will be very important today because we've recently seen a slight pullback in the housing market. Will this continue, or will we be right back to new higher highs? We've seen some very bullish sentiment over the past year in the housing market, but just recently it's been a little bit lower than expected. It'll be interesting to see what happens today. Bottom line is 2 Red Star news events, three news events here that can easily move crude from top to bottom of its range, and we are definitely excited to see that this morning. Moving forward here now, looking at a 4-hour chart. These 4-hour charts are the blending between the fast time frames and the slow time frames. I don't need a daily chart, too slow. I don't need a tick chart, too fast. I need something that's right in the middle. Now, we get a big red alert right now because you'll notice, very obvious here, a couple key components. Bear channel. We changed to bearish yesterday morning before we got the announcement from the Fed. Sure enough, yesterday we start to reverse. So late yesterday afternoon, early morning, overnight trading this morning. We talked about this on the blog last night. If you're following our blog, if you're keeping up with our morning prep, if you're reading the morning prep this morning, you heard us talk about the fact that today would be a lot of reaction to yesterday's FOMC report. Here we are. There's your reaction. So do I even need to read the report? Do I even need to dig in and try to understand what the report says? Well, if you'd like to, it's posted on the blog. It was there from yesterday afternoon. You can go read all about what was said yesterday in the FOMC report. But ultimately, this is all we need. And this is one of the things that we teach all of our students in School of Trade is not to worry so much about understanding all of the news. Just look at the reaction. The reaction tells me exactly what the news said. Now I need to make an educated decision on how to play this reaction. What do we see? We see a monstrous jump back up. Obviously, moving from 103 to 106 is no slouch, right? Is no slouch. So clearly we have some bulls that are voicing their opinions for higher prices. One very big variable, and you look at the time counter in the bottom of this chart, we got about 20 minutes left. If we close above that 106.54, we are looking good here to go up and test that 107.59. All this move down quickly being erased, right, by a jump right back up. So the two most important levels here, well, I should say three most important levels here are going to be 106.54, 107.59 to 108.22, and then, of course, the range highs up here at 108.93, right? We may see a run at 109 today. We may also see price, once the U.S. traders get to their desks, it may also collapse and come right back down in. So in my opinion, we are right around middle of the range. When I see big pops, I usually expect a big drop. Whenever we have a ton of move higher, we're usually going to get a bit of a pullback. So it's very interesting to see where we are right now. I need a little bit more information before I can make an educated assumption on what's going to happen this morning. Moving faster now. Looking now to a 60-minute chart. We see the same exact scenario here on a 60-minute chart, you'll notice, but now we have a lot more detail. And more importantly, now we can see we have a sell zone here at 106.71 that's apparently holding us up. If price, like I said before, if price collapses back below the 106.54 to 105.80, I am all of a sudden now very bearish, right? We start moving lower. I'm looking at 104.89 as going to be our target, 104.89. My target here for shorts today, 104.89. If I can make it through it, you know where I'm going next, down to 103.50, down to the 102.93. In fact, if we look even closer at this, runner target here today, 103.60, 103.59, right at the top there. Okay, so that will be the runner target if you're feeling lucky on that short today. So again, I'm going to be keeping a close eye on this as the traders come back to their desk today, reacting to the FOMC report. We know that, again, price could either jump up to 107.59. If we start seeing that tear in price action, we'll be buying pullbacks. But if we reverse here, I will be selling this thing short here down to that 104.89. One possible scenario, some analysis paralysis, getting stuck here sideways. If we end up going sideways, that's going to tell us the door's wide open for both scenarios. So keep an eye out if this thing starts to trade sideways this morning. Now I'll tell you, the chart that really stands out here is this. This is a 30-minute chart. But what really stands out here is when you move this down to a 5-minute. The 30-minute chart shows you a very, very good just picture of where we are right now. Look at the 30-minute ranges. We've blown right on through the previous range here. So we are above yesterday's highs. We're above the previous day's highs. We are well above the lows from yesterday and the previous day's lows. So we know right away here we are bullish. Remember, I think of the previous high of day, just like market profile traders think of the value area high, right? Above it, we are bullish. Apparently, the bulls see value in higher prices. Again, I could read the FOMC report to try to understand why they want higher prices, but I don't need to. All I need to know is where is price? The condition of price is the truth, right? Nobody lies about what their opinions are when they put money in the market. So we know that whatever happened out there, it got European traders and U.S. traders overnight excited about higher prices. One thing you can see, though, is 107.50, 108.07, 108.60, and there's 108.93. Now look closely at these levels. 107.50 is nothing more than a swing high. It's a previous high of day. But now we look up top here at 108.07, 108.07, the prior week's open, right? This is 1 week ago's open. We go back up to 108.60, the prior week high. So now we can see that's where, if we are going to be hunting for this morning, that's where we're going, that prior week high. We remember being at 108.60. We remember being at 108.93. We remember those price levels. We remember talking about 110. Now we're just a hop, skip, and a jump away from it. So what is the reality this morning? How do we trade this? Move it down to a 5-minute chart here on Crude. Zoom it on in. We can easily see this tremendous move higher. Now what I'm looking for here is, since we are inside the range overnight, and look at the size of this range overnight. $1.74 overnight, right? Trading in London, $1.74. Compare that to yesterday's trading range. What is that, 50 cents? Yeah, 57 cents, 55 cents. So you can see the dramatic difference in the ranges. Now, normally when we see a big opening range like this, we have, or overnight range to say, this would not be the opening range. Whenever we have a big overnight range like this, we expect to see large ranges today. Now, boy, I can see easily how we get some large ranges today. If this thing collapses back down, again, I'm expecting this thing to sell off. I'm expecting it to at least pull back here, and we'll take a look at where we expect this thing to pull back to. 106.25. 106.25 is the immediate pullback that I would assume we're going to get if this thing starts to take off to the downside. So I will definitely be looking. I'll be definitely looking for a short here going down to 106.25. If we slip and fall through that, though, as you can imagine, we could easily have this thing bounce briefly off 106.25 and then just start collapsing here all the way back down. Big pops often equal big drops. But at the same time, though, if these buyers decide their strength is here to stay, then again, we're going to see new higher highs, and I'll be buying pullbacks here, aiming after that 108.60, the prior week's high. All right, guys? So looking at the 5-minute chart here this morning, we are well above the previous high of day, well above last week's trading range, or almost up to last week's highs. We can see a huge range most likely coming today, and we have a lot of news today. 2 Red Star news events, 3 news events that apply to crude oil manufacturing reports. Very exciting day here looking at this initially this morning. Now all we need is some price action to tell us who's in charge right now. Are the buyers still in charge? If they are, we're buying pullbacks, wave patterns to the long side. If the sellers are in charge, if the sellers can wrestle this control away, we may have the blood hit the streets, and this thing may tumble here pretty quick. So we're looking good here this morning. But you know me. I'm always looking for a second opinion, and I got just the guy for us here, guys and gals. Let's see what Marty Errico is saying. Marty, how are you today? Thank you so much for joining us. How's the pit looking today? Are they scratching their heads? Do we know where we're going here this morning?
Good morning, guys. Good morning on a Thursday. Well, we know where we're going, that's for sure. I mean, you know, I was one of the fans of the market kind of bottoming out, right, and trying to really get a good handle on upside, right? I was figuring that if we didn't get below those 102.50s and start that downtrend, that we could most likely trade sideways and slightly higher. So we will definitely know whether we're going to stay bullish or whether we're going to chop sideways by really just 2 very simple variables. One, by looking at the spreads in our currency differential, right, and our supply-demand differential, and obviously those spreads, right, and two, these levels that we have. So I have a couple levels that I want to keep my eye on in particular that really are going to stand out, that are going to act as some really, really, really important resistance here, guys. First and foremost, we're talking about 107.55. So 107.55 we really want to definitely watch in a big, big, big way. Right, I got 107.55 here. We also have the 108.60 level as well, because we can easily chop up here and then start trading back down and maybe just trading between, right, 105.68 and 107.77. So, right, we can easily trade within this little range here, right, 105.67 the low, the high, 107.55, and dropping in here. So if this resistance does hold, that's what we'll see. 107.55 is going to be an important level. I also got some levels above that we're going to be watching, like, 108.60. Again, these are going to be some important pit session levels. These are going to be important settlement numbers and levels that we have above us that are going to be quite significant and important throughout the day today. Now you can see here, we're going to go over levels in just a second, but let me just pull up here what we got most importantly, first and foremost here. Again, we want to take a look at our usual suspects today on August 1st, and we're looking at right now your crude, RBOB, heating oil, right, all trading higher with the Brent as well, right? We're breaching the 107 level very shortly here in the crude. I believe we made it up all the way to just about 107.10, and again, at 107.50, at 107.55 is going to be right around the corner here. So overall, ladies and gentlemen, you can see here we have higher highs coming in on the crude, RBOB, heating oil, Brent, all of our buddies here. A little bit of sideways activity until we breach the major level of resistance. We can trade above it, of course, is always the case. Our spreads right now, the Brent WTI spread is down to about 235, 230. So overall, it's in contango by about quarter to 30 cents. So that's pretty nice to see upside. Right now, your calendar spreads, they're starting to confirm. As I made the sheet a few minutes ago, you can see we have them kind of in a little bit of a sideways territory, but starting to become in contango on the basis of a net change for the day. That's what I mean by in contango. So right now, we're looking at it, and it could possibly give us another bullish scenario. So soon we might be taking those red arrows away as soon as we open up, and we can see those SEPOX, SEPNOVI, and SEPTESs trade a little bit lower because they got blown out yesterday. So we're going to be using those prices of 83, 290, 83 in the SEPOC. SEPNOVI, we're going to be using the price of 230, and SEPTES 380. So anything above that, we'll be starting to kind of look at a little bit of a bearish market. Anything below those numbers, we'll be looking to buy. So that's how we're going to be looking at the supply-demand differential as we do every single day. Right? Continuing on, dollar, ladies and gentlemen, higher today just a bit, but fading off the high prints overall, right? We had the dollar rising this morning all the way up to about 82.17.5. Now we're starting to fade off that high, and now trading down into the 81 handle almost. We're 82.05. So we're getting very close to that 81 handle, and again, and that dollar trades a little bit lower, crude trading higher. So you can see we do have a risk-on sentiment. Again, first the dollar was higher throughout the day, but as I mentioned now, it's fading off the highs. So that's a good thing. So the dollar faded off the highs, it sent up crude. So again, we did have a higher dollar earlier, and on net change standpoint, we're still higher on the dollar today. But the important significance is on the net change on the day for the dollar, does it up 51 points now, does it start to curl down and fade off the highs completely and then become a negative territory? But right now on the day, net change is higher with your euro and the rest of our commodity currencies, the Canadian and the Aussie, lower. Right? So that's basically what we've been looking at here in terms of just our suspects, our spreads, volatility still holding steady and firm as well, which is very exciting to see some nice firm volatility, right? Natural gas is always the case here. We have an inventory number today on natural gas, and you can see here we're pretty much just still trading within the range, right? From this whole entire week, it's been an ugly range this whole week, and you can see we're still within range. This is Monday, Tuesday, Wednesday, now here's Thursday. So you can see the ugly, ugly, ugly range that we've been in. And we're going to be looking to buy the lows here, guys, at 342, right? Very simple here. As we trade within range, right? You can see the range here. As we trade within range, right, we have been selling the highs and buying the lows. Of course, it's always the case. We've been buying those lows and selling those highs. So now, ladies and gentlemen, what we're going to be looking to do is buy these lows here at the 342. Now, don't get me wrong. We're consolidating even more and more, so we're going to get a nice burst and breakout as we do usually every Thursday because we have inventory numbers. Platts and Reuters are calling for 56 BCF. That's 56 BCF. Anything above 56 will be selling. Anything below 56 will be buying. And again, that's our number for the natural gas. So we could have a nice buying opportunity here at the 340s today, and then really pay attention for inventory numbers as we kind of come into the afternoon. Crude, of course, we're going to keep our eye on that 105.77, 107.55. Sorry there, guys, 107.55. So it's a pretty simple game plan of attack. Watch what happens up at the highs here on the crude at the 107.55. If we break above that, we can easily see 108, 108.67. And for the natural gas, we're going to try to buy those lows at 340, right? We're going to buy the 342s, sorry, 340 and 342 we're going to be buying, right? Very simple. And then, obviously, we're going to be trading the reaction to the number and seeing where we go once we burst out of that range. Okay. Volatility on the natural gas as well has been holding firm and steady here, starting to rise just a bit as well. That's something important that you also want to keep eyeing. Let's get to these levels from yesterday now, ladies and gentlemen, as we are looking at levels here from Wednesday's trade after our inventories and after our Fed and after our GDP and all the numbers. You can see we had a really nice range yesterday, about a $2 range, more than $2 actually, about a $2.25 trading range. So it was a really nice day. In terms of your high, pit session high, 105.08. Your low, 102.93. Closing settlement number, 105.05. Today, your daily pivot, 104.35, which we are trading well above at the moment, ladies and gentlemen. Trading well above that at the moment. Resistance up above, I got 105.77. I got 106.5, which we are just above right now, 106.72. And then I got that 107.55 and then 108.67. So again, I'm actually going to throw that in here, guys, that 107.55, because it is quite significant, and I do want to point that out. So again, that's going to be resistance up above. That could bring us up to 108.67. If not, we'll be fading it back down and using these levels of support, right? We're going to be using that previous high day as some support, daily pivot as support. Let's get down to that. Now, speaking of support, let's get down to support. 103.62, 102.20, and 100 even 05. Open interest this morning, 359,575, which is actually just a bit lower here. No, just about, higher actually from yesterday. Kind of just sitting actually unchanged from yesterday. I'm sorry, I'm looking at my notes here. Unchanged from yesterday, open interest, which are indicating no really big shifts in terms of just shorts getting out of the market, really. So it's kind of showing us that shorts are kind of getting squeezed out, right? And we can start to trade higher. Not a lot of shorts in the market because, remember, yesterday we were up at like 360,000, so it's only a few hundred that were off. But the other day we were at 365,000, so we're showing that the shorts are, open interest coming lower, shorts are kind of getting out of the market. Volatility, ladies and gentlemen, this morning here we have implied volatility about 22 to 23%. Again, implied volatility, it just popped up to 23%, but you can see the VIX was sitting at about 22%, and on the OVX we were about $23 even. So you can see volatility kind of holding firm and steady around these levels. Now, if vol starts to catch a bid and trade higher, that will be very promising for upside, and that will get us above the 107.55 and make us trade higher, because you have to keep in mind, all the other variables will make us rally then once VIX gets up higher. All right, guys, let's rock and roll. Take a quick look over at your natural gas. We have an inventory number today, as I mentioned. For our natural gas, we are looking for expectations of 56 BCF, and anything above that we'll be selling. Anything below 56 we'll be buying. It's a pretty simple game plan of attack in terms of natural gas, and we're going to be looking to buy the low at 342 to 340 even today during the morning pit session. But and come 10 o'clock, we're going to be sitting on hands because we have inventory numbers, and again, we're looking for 56 BCF. Let's go look at those levels now, guys. Yesterday, natural gas, pit session high, 346.80. Your low, 342 even, and we had a closing settlement number of 344.5. Look at that. Your daily pivot just one tick below it, 344.40, which is your daily pivot today. Levels of resistance above I have for you here at 346.80, 349.20, and 354 even. Guys, support down below. I got 342 even. Again, that's your S1 and the low from yesterday. 339.60 and 334.80. Again, if we do end up getting a build in inventories, that's where we can possibly find a little bit of relief here, guys, to the downside. As we've been watching open interest, 297,246, and that's just a bit lower from yesterday, down about 2,000 contracts, which would indicate that we can possibly see shorts getting squeezed out. We can buy that 342, and if we get a little bit of a lesser than expected build, right, or even a draw, that will send us higher, right? So a lot of interest in that 340 call, so that's why I'm saying we could buy the lows at 340. And in the puts here in the pit, they showed a lot of interest in 355 put. In the pit as well, guys, for the crude, real quick before we take off, there's a lot of interest in the 105 half call, 105 even call. So we can use that 105 even and 105 half as some support if we happen to bounce off that 107.55 and trade within that range. But we can use that as a nice little pullback and buy that. So again, guys, that's really what's going down on the trading floor here today. It seems like it was a very, very busy day yesterday, and I'm thinking today's going to be the same here as we're ready to rock and roll here on a Thursday. Again, I'm going to throw it back over to JJ in Los Angeles. I'm about to see you guys in just about 50 minutes.
Marty Yerko, everybody, from Traders Audio. Thank you, Marty. Always a pleasure having you here today. Hope you're having a great summer out there, my man. All right, guys. I want to thank Marty and his partner Jeffrey over at Traders Audio for being a great partner in crime here this morning. Don't forget to check them out every morning at 8:50 a.m. You can email Marty at tradersaudio.com. And don't forget to shoot me an email. I'm JJ at School of Trade if you got any questions for me. And, of course, we'll see you guys here same time, same place, 7:30 a.m. Monday through Friday. We'll be back here in 23 hours and 30 minutes for a finally Friday edition of our crude oil morning prep. Don't forget to send us your feedback. If you'd like to see anything added, removed, if you'd like to hear anything else covered each morning, we'd love to hear from you. Keep in touch. Don't forget to learn this stuff so you can earn with this stuff, and we'll see you guys next time. Adios, amigos. Bye-bye for now.